is latest market news. I'm Uliana. Asian stock markets are modestly higher in cautious trades following the mixed cues overnight from Wall Street, with regional sentiment overshadowed by investors awaiting a flurry of Fed policymakers' views and the next global steps in trade as the UK gets set to exit the European Union. Japan's Nikkei dropped 0.43%, weighed by financial stocks, which were hurt by lower US yields, and exporter stocks, which fell on the yen's gains against the dollar. South Korea's Kospi jumped 1.03%. In China, the Shanghai Composite and the Hong Kong Hang Seng rose 0.01% and 0.40% respectively. At the close in Australia, the S&P ASX 200 declined 0.07%. The dollar trended weaker in Asia on Tuesday on waning expectations of the US Federal Reserve stepping up interest rate hikes, though an extraordinary day of news about Russian meddling in the presidential election raised political risk. The US dollar index, which measures the greenback's strength against a trade-weight basket of 6 major currencies, is 0.08% to 100.08. The euro was slightly higher, with euro-US dollar up 0.23% to 1.0764, holding below Friday's 6-week high of 1.0781. Great Britain pound US dollar was last quoted at 1.2349 US dollars, down 0.08%. Australian dollar US dollar traded at 0.7707, down 0.31%, while US dollar Japanese yen changed hands at 112.78, up 0.20%. The UK economy will be under scrutiny today with a pair of updates, starting with the February report on consumer inflation. UK Consumer Price Index 9:30 GMT. The Bank of England decided to hold its policy interest rate at a record low of 0.25% last week, while inflation is expected to edge up to a 3-year high in today's update for February. Economists expect that consumer prices at the headline level will increase 2.1% for the year through February, topping the 2% mark for the first time since late 2013, according to TradingEconomics.com's consensus forecast. Core CPI is expected to tick up in February, rising 1.7% in year-over-year terms. That's still comfortably below the Bank of England's target. It was the latest market news provided by ICO FX. Goodbye.